So today I'm going to be talking about the liquidity cycle and when the highest probability trades form after. So the first one is external taken to target an internal pullback trade. So this can only be used as a pullback trade. So let's say market is down here, right? So then market just swept this external low, so this external liquidity. And if market gives an entry model for here, it's only valid for you to enter from here and only target this internal liquidity, because this one is going to be used as a pullback trade, like it says over here. External taken to target the internal. So when this external liquidity got taken, you can enter from here if an entry model is provided for you to only target this internal. Anything more than that is going to be low probability because the pro trend is still bearish, so it's going to be a pullback trade. And here's another example. So let's say price is up here, right? After sweeping this external liquidity and the pro trend is bullish, this is going to be sold as a pullback trade after taking this internal. So you can trade from here to target this internal, but only this because from here we expect the price to even go higher. The second one is external taken to target an external expansion trade. So this one can be used as only as an expansion trade, not like the pullback trade. So this one is when market is here, right? Let's say this one is when market is pro bearish and market swept this external. From here only you can target another external because this one is going to be an expansion trade. So you don't need just to do internal. You can target the whole external. But don't be greedy and put your full tip over here. At least have a break even in something in the middle here, inside this range, like the internal liquidity, or at least some partials or break even. Then you can have your full TP around here. So, and this is a bullish scenario. So after market swap this internal, since we're expecting an expansion, we can have to sweep this external, so not internal. After sweep this external, since we're expecting our expansion trade, we can set our full TP on the external high, and this is where the type of trades that gives you like high risk to reward. And the third one is this one. So this one is when internal is taken to target an external only in pro trends. So this one you only want to use it when the pro trend is, let's say, your direction. So this one, as you can see, it gave a reversal EPA, which confirms that the pro trend is bullish now, and let's say it's also reacting alpha high probability pairwise. So this one is when market is below here, when it sweeps this internal liquidity. This is the only time where you can trade from an internal to an external, but only in pro trend. So after sweep an internal, you can hit targets an external, but this one as well set like some internal break even or to have some partials. So from here you can target this external high. And here's another bearish, it is a bearish scenario. So let's say the pro trend, like this over here, the pro trend is bearish over here, and then when market sweeps this internal liquidity, you can target this external high low, but again set some break even in this internal range somewhere around here. So this is the only time where you can trade from internal to external, but the trade has to be only in a pro trend. So here are some charts example. So the first liquidity cycle was again external taken to target an internal, only a pullback trade. So as you can see from here, this low, as you can see here, so this is external to internal. Ignore this one for now, I'm gonna explain it later. So when this high swept this external high at the reactive imbalance, if an entry model was provided somewhere over here, it was valid for you to enter and only target this internal over here. As you can see, the structures over here. So one structure, so this is an internal liquidity over here. So again, and this is only going to be used as a pullback trade because the pro trade is still bullish. So when this external got taken, we had to have an imbalance. You could have entered from here, but only targeted the internal liquidity. And the second one was external taken to target an external expansion trade. So here is this one. As you can see, the pro trade is bearish. So when this high swept this external high, you could have traded from here, since this is gonna be an expansion trade, because the price delivery is confirming it, so it's at absolute high probability. We can target from when this external, so this external, we could have traded from here and target this external low. But again, don't be greedy. Set like your break even somewhere here or your partials. So this is when, like if I go to the 4 hour, go to the 4 hour, as you can see from here, um, let's see from here. When this high swept this external, it just continue to go lower because it's an expansion trade like we mentioned on that chart. And next one is when internal is taken to target an external, only in a pro trend. So if you go back to this one, let's just delete this. If you go back to this one, where it says internal to external, only in pro trend. So we can confirm our pro trend because over here it gave a reversal EPS, so we're bullish, and it's yet another high probability inducement. And when it came here, it's also yet of an high probability POY. So this reversal EPS we can confirm that's bearish, bullish, and from here it's now yet of such a high probability. So the pro trend is bullish. So when price took this internal low, when price took this, it was valid for you from here to enter to target this external high. By again set your break-even point somewhere in this internal liquidity, somewhere around here. So after sweeping this external liquidity somewhere on this low, if an entry model was provided here, you could have entered to here and then target this external high. So I have one more example just in case. So the first one again, external taker to target internal, pullback trade. So when this high swept this external liquidity, it was right for you to enter from here and target this internal low only because we're expecting this to be a pullback trade. Second one, expansion trade. So when external gets taken, we can target another external. So this one. So as you can see from this one, these green dots are external liquidity values. So when Asia took this external low, we don't trade this. So that's why we waited for London to sweep this again. When it swept this external liquidity, we were able to target this external high. Since the protest is also bullish and we're expecting an expansion, this is an expansion after taking this external. And last one is internal taken to target an external, only in a pro trend. So this one, I can't necessarily confirm that this one went higher, but let's just say it did, right? So after let's just say this low sweep in this external, and let's say over here so you have such high probability and we're bullish. Let's just say that because I can confirm if this is a pro trend bullish. But let's just say this one swept this internal, and then from here it was already right for you to target this external high. But again, set your break-even point somewhere here internals or whatever. So this is how the highest probability trades happen only after these three that I just mentioned, the liquidity cycle.